Oil daily forecast, March 23rd, FXEmpire.com. The light sweet crude markets fell during the session on Thursday as fears of a global slowdown have reemerged. This was predicated basically upon Chinese manufacturing numbers that have been a bit weak, at least on the weak side, over the last 5 months. A slowdown in China is pretty much every bull's nightmare, as China is always the first thing that they'll bring up when you ask them about the global economy and why should we think that it will continue to rise in value. Take away the biggest reason, and of course you've got a lot of panic. Of course, this is an engineered slowdown, and we're talking about a slowdown from 12% to 7%, so we should keep a little bit of a perspective here. The candle for the session isn't a hammer, but it does have a lot of the same characteristics. You can see that we fell and we bounced a little bit, and more importantly, we are on a massive support area, about 104 to 105. Having said that, we think the bull market continues in this commodity, and as such, we are willing to buy a break of the highs from the Thursday session, expecting 110, 112, and 115 to all be areas that could possibly give us trouble. Now, previously, we had a flag, and we still do. It hasn't broken down the flag. It's actually just retesting the top line that measured a move up to 122, and that is still our thesis going forward. We will add, once we clear the 110 resistance area, though, in order to lever this position up, as all of the fundamentals are basically lining up in favor of higher oil prices.